Good morning, student. Today is 4th June 2020, and this is my lecture number 11A. I am going to teach accountancy for class 11th, and under this chapter accounting standard accounting standards, and in short I can say IFRS means International Financial Reporting Standards. This is the name of chapter, accounting standard and IFRS. Full form of IFRS is International Financial Reporting Standards. Yes, this is the name of chapter. Under this chapter, learning objective will be need for accounting standard, nature of accounting standard, utility, benefit of accounting standard, limitations of accounting standard, international financial reporting standards, etc. will be our learning objective. After studying this chapter, we will be able to understand all the things related to this chapter. So first, need for accounting standard. Need for accounting standards. Student, need for accounting standard give us various information. We all know that accounting is an information system, and its main aim to provide financial information to a number of parties such as investor, management, creditors, government, etc. Such information is provided through a set of financial statements, namely profit and loss account and balance sheet. We all know about it. In my previous video, I have also explained many times about financial statement. This is profit and loss account and balance sheet. So, as per section 129 of the Company Act 2013, Company Act 2013, the financial statement of an enterprise should depict a true and fair view of its opening result and financial position. However, what constitutes true and fair view has not been defined either the Company Act 2013 or in any other situation. Over a period of time, a number of generally accepted accounting principles, that is GAAP, in form of concept and conventions have been developed and accepted to bring comparability and uniformity in the financial statements of various business entities. But the difficulty is that GAAP also allow a large number of alternative treatment for the same item. Different enterprises may adopt different accounting policies for the same item over different accounting periods. As a result, the financial statement become uncomparable and inconsistent. Hence, there is an urgent need to standardize these diverse accounting policy. Certain standards must be followed for preparing the financial statement so that there is the minimum possibility about the figure content the financial statement. The International Accounting Standard Committee IASC, International Accounting Standard Committee came into existence on 29th June 1973 to develop accounting standard. The Institute of Chartered Accountant of India ICAI, Institute of Chartered Accountant of India, and Institute of Cost and Work Accountant of India are associate member of IASC, a International Accounting Standard Committee. The Institute of Chartered Accountant of India is also drawing up its own accounting standard, which are basically permitted on the International Accounting Standard. So these are the need of accounting standard. Now, next point is concept of accounting standard. Student, we have to know that accounting standard and IFRS both are different from each other and both have similarity also. Now, accounting standard may be defined as written statement issued from time to time by Institute of Accounting Professionals, satisfying uniform rule or practices for drawing the financial statement. According to Kohler is a writer, defines accounting standard as a code of conduct, defined as a code of conduct imposed on accountants by custom, law or professional body. So this is the concept of accounting standard. Now, next point is nature of accounting standard. Accounting standard lay down the norms of accounting policy and practices by way of codes to direct as to how the transactions and events should be dealt with in accounts and disclosed in the financial statement. For example, accounting standard may define the term cost and lay down a definite method for valuation of inventories with minor modification under special circumstances. In this way, they remove the effect of diverse accounting practices and policies, so that financial statement of different business units become comparable. Now, next point is objective of accounting standards. Objective of accounting standards: to ensure uniformity, in the preparation of financial statement, to provide information to users, remove the effect of diverse accounting policies and practices, to ensure consistency, transparency of financial statement, to improve reliability and credibility of financial statement. So provide to ensure uniformity in the preparation of presentation of financial statement, provide information to various users, remove effect of diverse accounting policy and practices, ensure consistency, transparency of financial statement, improve the reliability and credibility of financial statement, etc. are the objective of accounting standard. Now, next point is utility or benefit of accounting standard. AS, accounting standard, in short form will be AS. Accounting standards have been involved to curb and abuse of flexibility in the adoption of accounting policy by the business enterprises. Accounting standards provide the accountant those accounting policies which are most suitable in a given situation. The utility of accounting standard may be stated as follow. You may see first will be accounting I once again repeat, utility or benefit of accounting standards. Yes, first benefit, accounting standard improve the reliability and credibility of financial statement. Second, accounting standard ensure the consistency of financial statement. Third, accounting standards help in resolving the conflict among various parties. Fourth point, accounting standards significantly reduce the chances of frauds and we can say manipulation of financial statement. Fifth point is help to auditors. So these are the points related to benefit of accounting standard. I am teaching about accounting standard, not about IFRS. Now some limitations of accounting standard also derived. Limitations of accounting standards. Restrict initiative. Restrict initiative means since accounting standards are mandatory in nature, they restrict initiative for better presentation and disclosure. Next point is rigid in nature. Accounting standards are rigid in nature. They restrain the accountants from using a more suitable alternative situation to a particular problem. And next is based on historical cost. We all know about historical cost of concept. Assets are shown in the balance sheet of historical cost, and as such depreciation is also charged on such historical cost. It is for this reason that IFRS were introduced, where in the assets and liability are required to be shown at current and fair value as at the date of balance sheet. Now next is obstruct the judgment of auditors. Accounting and standards obstruct the judgment of the auditor as the standards are mandatory. So these are the limitations of accounting standards. Now next thing is IFRS, International Financial Reporting Standard. The term IFRS issued by International Accounting Standard Board. International Accounting Standard Board, IASB. IFRS also cover a wide range of international accounting standard. IAS, International Accounting Standard, issued by International Accounting Standard Committee, IASC, and IAS require financial statement to comply with all requirement of IFRS. Some assumption of IFRS is of IFRS. IFRS assumption of IFRS is first going concern assumption. We all know about it. Going concern assumption. Second is accrual assumption or concept. Third is measuring unit assumption, etc. Now, next point is need for IFRS. Need for IFRS. First is each country has its own set of rules and regulations for accounting and financial reporting. Hence, when an enterprise decides to raise capital from abroad, the rule and regulation of that country will apply, and there will be differences in the financial reporting in the foreign country as compared to its own country. Hence, a strong need was felt for adoption of IFRS so that uniformity, comparability, and transparency should be bring in financial statement. So, first need may be easy to global capital market. Easy access to global market means capital market have now become global, and companies are now in a position to access the fund globally. But investors all over the world rely on financial statements preparation on the basis of IFRS. IFRS based financial statements are now a prerequisite for the enterprises seeking to raise overseas fund. Second point is easy to make comparison. Easy to make comparison. International investors would be like to compare financial statement based on internationally accepted set of accounting standard. It improves the ability of investor to compare their investment on a global basis. Now, next point is third point is uniformity in financial reporting. Fourth point is lower cost of capital raise abroad. Fifth point is true and fair valuation of assets. And last, difficult to commit fraud the account. So these are the need of IFRS, because something error found in accounting standard so that IFRS is implemented on global basis. Now, benefits of IFRS. Benefits of IFRS may be same as we have explained in need. For example, easy access to global market, helpful to investor, helpful to investor, industry, lower cost, capital raise abroad, etc. are the benefit of IFRS. So, at last, we can say accounting standard is adopted by different enterprises under the countries, but IFRS is adopted and assessed to global. So these are the difference between IFRS and accounting standard. Now I will meet you in next video with some new topic. Thank you very much.